Hello and welcome back to our channel. In today's video, we'll discuss how stockbrokers like Robinhood make money when they offer free stock trades. It may seem counterintuitive, but even though brokers like Robinhood offer free trades, they still make money on each trade. So, how do brokers like Robinhood make money if they offer free trades to their clients? The answer is that they make money through a practice called payment for order flow. When you place a trade on Robinhood, the broker sends your order to a market maker, which is a firm that agrees to buy or sell shares of a stock at a certain price. The market maker then executes the trade and pays Robinhood a fee for the order flow. Essentially, the market maker pays Robinhood for the right to execute the trade on its platform. So, even though Robinhood doesn't charge you a commission for the trade, it still makes money on the transaction by receiving a fee for routing your order to a market maker. Other ways brokers make money. In addition to payment for order flow, brokers like Robinhood also make money through other sources, such as interest on cash balances and margin lending. When you deposit money into your account, Robinhood may invest that money in short-term bonds or other low-risk investments and earn interest on those investments. They may also lend you money to buy stocks on margin and charge you interest on that loan. Another way that brokers like Robinhood make money is through premium services and features. For example, Robinhood offers a premium subscription service called Robinhood Gold, which offers extra features for a monthly fee. It's important for individual investors to understand how their broker makes money and what fees and charges they may be subject to. While commission-free trading may seem like a great deal, it's important to weigh the potential costs and benefits before making any investment decisions. That's all for today's video. Thank you for watching, and please don't forget to like and subscribe to our channel for more content.